Hello, hello. Good morning. Good evening. Welcome to another ES Futures Trading Stream. Today is Sunday, December 17th. It is 9:55 p.m. Eastern Time in the US. The end of the year is here, basically for all practical purposes. For all, I was saying, for all practical purposes, the trading is basically over for the year. At this moment in time, just 2 weeks after before the end of the year, uh, head managers, hedge fund head managers are out on vacations. The second in charge, the second in command, has only one mission. Now, don't screw up, right? Just keep it nice and easy. Don't play anything that can risk what we already have. And what I was watching here, what I think had happened or was happening here, all time frames are in sync. All time frames are trending higher, monthly, weekly, and daily. And when we can see monthly, for example, has a really good, nice rally from the lows that the market made like 2 years ago, basically like 2 years ago, right? 2 years ago, no, a little bit more than 1 year ago. And the weekly is showing some signs to me, some signs of exhaustion here. This is weird here, what's happening here. And it's having, like 6-8 weeks back to back going higher. There's no rebalancing of this. There's no sideways trading here, no steps here, no sideways trading here that allows the rebalancing of this inventory. And this gap we have here is the only gap that the weekly time frame actually has. When we check the daily time frame, can see the daily time frame that is extremely elongated, right? We have a range here. Every time the market has a break was tested, break, test, break. This one was not tested, right? It looks to me like this part, it looks like a short covering to begin with, and this part like a short squeeze. But the last part of short covering when traders, when shorts finally throw the towel, and usually when you have capitulation here, it's a sign that trade can be over. Friday, we have a perfect again. And also, why I say that, capitulation, because this market, just look how many gaps this market has. 1, 2, 3, 4, 5, 6, 7 gaps. Every single gap after that that the market had, it was closed before the opening, at the opening, or during the session. 3, 6, 7 gaps. It's a very emotional, very elongated market. I haven't seen this. Is the first time I see this kind of activity here. Jim was saying like, no, it wasn't with him, but I guess the maximum he saw was, I believe, 5 or 7 as well. I don't remember. Well, I guess 5. And look at this. What happened Friday? After all this movement, it happened inside that. inside bar, perfect inside bar here. The trade is go with the breakout of the inside bar, preferable in the direction of the trend. The trends to the upside, trends to the upside, trends to the upside. All time frames are trending higher. But I cannot avoid but wonder why how good can be a breakout to the upside here. Notice the weekly and the monthly has stopped really, just not that far. Well, actually, not that far from this high. Monthly. This I can be see here in the monthly. Also, this all-time high in the weekly is the same that we have here. And this is a significant reference. What happened, if there's a breakout to the upside, the market more likely will take this high, this all-time high. This is the market's all-time high. I will make a new high here. And usually, when markets do an all-time high, they don't just do one all-time high. Okay. They do one after another after another. It's very rare that they just hit the all-time high and then from that it breaks. I'm not saying that can happen. That cannot happen, right? But it's rare. Now, in the condition that is this market is has right, has how this rally was happening, what will happen if this market breaks this all-time high here? When inventory is extremely, really long, elongated, market is very elongated without rebalancing here. These pictures that we have here, gives an idea. Right? This is to have a panoramic view of what is happening in the market already, what's happening here. Now, end of the year, we are coming to the next. The rollover period has been completed. We don't have December contract anymore. You just can't imagine, right? What can happen? I thought that there was a lot of short covering here. The trade is getting short this market. Just imagine, naked cold sellers here, just being, killed here, and the volume we had, getting into Friday, I say I wasn't going to trade, but there was some opportunities there. I took a couple ones, and look at the volume we have, right? And this kind of volume we have, you have these multiple events happening. We have expiration of options, expiration of indexes, expirations of a lot of things. This quad-reaching thing, right? And this kind of volume is unusual, right? And anything can happen. It's very, very dangerous. It's very dangerous. There was a situation on Friday when you can see it, right? You can see the market was here. In this part, the market was getting too long, and every time the market tried to rally higher, it just was brought back to what at the end was POC, which is this one, right? Every time the market tried to go higher, it was pulled back here, and every time the market has less and less, all right? Under normal circumstances, boy, this could have been a long here, but this was anything but normal, right? And this trade here happened very late in the session, I super risky. I didn't take anything. If you have missed this, don't feel bad. Well, I don't feel bad because this is extreme. This one carries extremely risk. You know, this could have gone higher, and the market could have closed down here. You may have a long, and then you have a good profit, and suddenly you can, I mean, trades can be, you know, negative really fast. It happened to it happened to me multiple times. That's how I learned not to trade these days, right? But I was watching this 45-degree line develop, and I took my chances here. When the market took this low, you know, when the market didn't came back all the way up to here, I got an opportunity here and another one down here, and that was it. And I hesitated to take a long here. I hesitated to take a long here because value was overlapping to lower at the time, and POC was moving lower relative to the previous day as well. So that's why I consider also, and you know, this was a potential, but also look at what we have here. No, there's no excess here at the bottom. Technically, this is a good high. This one is not. Okay. Now, with December contract out of the side, not being in the way, with the end of the year, just 2 more weeks into, you know, for this year, here, basically, what we usually have here is a very thin markets. Very thin markets, but a lot of small trading activity here. A bigger traders taking advantage of that. Markets gets too long, too short, and you know, suddenly a correction just happened. Remember, most of what I do, what we read, I mean, in my type of trading is like this. Most of what I do has to do with rebalancing of inventories. Most of what short-term trading do is dealing with this rebalancing of inventories. You know, when traders just get fixated on price on a market that gets higher and higher, they will only buy the dips, buy breakouts, whatever. Right? And what I do is I play the rebalancing here. You know, when markets gets too long, when the market keeps buying, for example, it gets to a point that the traders just become nervous, right? That the market cannot go higher. To go higher, they need to flush these weak traders. They need to flush the weak traders so it can keep going. You know, it can keep trending higher. Again, if this was not end of the year, this was not the last of the day contract, that could help explain this. You know, these traders are flush here. There is some of that also. No? But that also, you know, in hindsight, it's easy to speculate or to see anything. All right, I can say, for example, no, this is a market getting too long. Yeah, it's too long here. Market trying to rally, selling was coming here, surplus selling was coming here, and then all the sellers take profits here, right, and can actually go long, which is the trend that this market is having, right? Because we also had, on Friday, we had the rebalancing of the S&P, and the day before, same thing happened, right? Markets start to sell here. You can see market sells here, sells here, sells here. It just got too short, you know. But look at this. It got too short, you know. This is market very long, right? It got too short way up here. No, it not getting. I mean, a market not necessarily, you know, will get short or too short down here, right? Or down here only. It can be, way up here as well. It will all depend on the time frame. Now, what time frame you are saying? Short time frame trading happened here, was getting too short here. These shorts get flush with this rally, and then here we go again, right? There was consistent selling here. There was a lot of selling here, and a lot of buying the next day. Just, last 2 days of December contract. Coincidence? I don't think so. FOMC here, market super, super, super elongated. Notice how Thursday did not take M low, right? Friday did not come down to the single prints of the previous day. Technically, this is good, and this is good. We have excess here, we have excess here as well. Now, the overnight is a completely different animal. I don't trade the overnight because the volume actually is really low, very low for anything of relevance to happen during the overnight. I'm not saying it cannot happen. I'm not saying it doesn't happen, right? But the odds are very low, right? Because if somebody, for example, is going to sell here, or is going to buy, right? Somebody big, right? Somebody that has the power to stay in the market, for example. They're not going to come to the market to buy 900 contracts. They are going to buy a lot, lots contracts. And when you feel a position, what you want is, you want the spread to be really low, really short spread. You want to start feeding, for example, you can feed here and end here or here, right? But because the overnight doesn't have liquidity, you can start feeding here and end up, your average position can be way up here, for example, or way up here, which is not good for anyone that is trying to do that. That's why I don't consider the overnight trade or the overnight session to be of relevance. It is either confirmed or rejected. Whatever happened in the overnight is going to be confirmed or rejected during the regular trading hours. Not, for example, right now we have how many hours already? 4, like 8 periods, only 30,000 contracts. You can see over here, you can see the same thing that happened on Friday is happening in the overnight. Selling, because you can kind of understand what the market is trying to do, or what traders are trying to do. They are selling from this area. They're selling from this area again. Right? Pick a level. Let's pick a level. We can pick this one, or we can pick this one. Any of those, or this area actually, right? And it's selling from the same spot. Okay, it's selling here. This M did not take all the stops here. Really did not. And this overnight is adding more to that. Well, this overnight is going to be when the market is going to open tomorrow. I have no idea. It can open way down here because this is not good, or it can open way up here, or it can open here. But I try to be as neutral as possible, but I try to also to analyze, to observe as much pieces of information as I can. I think there's a lot of pressure that has been removed from the market. And what is coming for this week is just basically retail trading. The events we have for next week, what do we have? Economic calendar. All right. Next week let's take a screenshot of this thing. Screenshot here. Monday, we don't have anything on Monday. Bosti, how many speakers do we have on next week? Only one. You know, consumer confidence on Wednesday. Let's see what happened here. I will start paying attention to what happens, to whatever things may happen on this report. We have GDP on Thursday. Is this? Yeah, GDP on Thursday. Weekly jobs also. What else? PCE. Personal income analysis and PCE on Friday. I guess these two events can be. Let's save this and add. I want to add this to my notes. To my, this is part of my homework, right? Part of my homework, and what I do here is I actually add these two here. What else do we have? What else do we have? GDP, retail sale, no, that's Britain, Great Britain. Personal income, core PCE. Personal income and core PCE, which is, I think these two are the more relevant pieces. I mean, this is to close the year, the last quarter. And this is the favorite Fed favorite indicator. You wanna know what these things are? Just click on that. Just click on the link. I will give you a description. And we as traders must kind of like understand which ones can bring some volatility to the market. Right now, the market has a vicious trend into the upside. I think was probably a short squeeze. The market has gained almost 15 or 16% in the last month or couple months, which is this is really good. And I know markets are designed actually to go higher, right? Having this mentality to be short in the market or to short any rally is actually kind of like puts us in a disadvantaged position, in a bad position, because the markets are designed to go higher. If I'm going to check, for example, let's just do it. Let's do it for the sake, right? If I'm going to do maximum available, let's do quarter. Okay, and now look at what is happening. For example, this is the last 20 years. Last 10 years, and if you have access to something bigger than this, you will see the market, this has been a bull market for the last kind of like 40 years, right? And being short, having a mentality that going against that, we are going to have hard times doing that. And the best thing for me is to be neutral here. This is high volatility. Just look at what happened here, right? This happened here. 21 happened, and there's a big injection of capital in the market, the system. And look at this. Look at the difference between this part of this chart. That this is quarter. Each bar is 3 months. And comparable to this one, right? This is a big break here, for example, in 2018, 2018. Oh, there was a crash, you know. But this pretty, you know, out of the ordinary what we are having here in the past 3 years. Okay, and I would just be very cautious. Huh? Have a lot of pay a lot of attention to what the market does. But my mentality is just to, you know, my how can I say this? My default for the next couple of weeks is to be just watching, to be in silence. You know, if I try to get rid of any bias, you know, up to now, uh, that's my default. Try not to get any bias. Emphasis, you know, big emphasis. You know, try, because it's really hard to do it. You know, these 2 weeks that are coming is even more. I will just, but if I can put something in my mind, it will be just look from far away, right? Look from, be away from this market. Be very careful here. This overnight, but I don't want to talk about this, you know. But you can see this market can come really fast to here or up here. I don't care what is happening now. I will see tomorrow where this market opens. Seller is here, last down here. The last thing the market saw is a rally, you know. But this rally, the market has kind of, the range of this rally is almost the full range of the whole day. Now the next thing, let's take a look at what Jim had to say. I didn't check, but I mean, I did check him past the last week, but I didn't do anything myself. I didn't do a market update for the weekend. Where are you here? Okay, let's hear what he has to say.
There have been two consistent messages or themes in the previous weeks. First, don't fight trends. The trend has been clearly higher. The second message, which sometimes is confused as being contradictory, is the market is exhibiting a very poor underlying structure. Poor structure can exist for some period of time. What leads to market overvaluation? FOMO. When FOMO takes over, traders begin to search for securities that are short, stocks or groups that have not yet moved, as well as piling on to momentum trades. The past is forgotten as multiples and valuations are ignored. The greater fool theory is alive and well. Monday's immediate focus. Friday was an inside balancing day. Following inside balance days, we apply the balanced trading guidelines. The balanced trading guidelines applicable for Monday are: 1, remaining within balance further refines the balance and increases the odds of another rotational day. Secondly, go with the breakout from balance. Third, fade or go against a breakout that fails to carry through. If a breakout fails to carry through, the possibility exists that the market will begin to rotate to the opposite end of the balance. On any downside breakout, the late afternoon pullback low at 47.3750 on the day of the FOMC announcement is a significant reference. Failure to find acceptance below that level keeps the market balanced. Acceptance below 47.3750 greatly increases the odds of a more significant correction.
All right. Now this is pretty interesting.
Guidelines applicable for
What James says, right? And James says this all the time. And you have to say, or you have to hear it over and over and over until it becomes part of you. We were talking about the balance we have on Friday. This is inside day, right? Inside day, balance of the inside day. There's a breakout that happened here. You know, a breakout is the breakout's not of this day, right? It's a breakout of an inside. It's a breakout of an inside day, which is a form of balance. That's what they're talking about. That's why it's relevant. We had something similar. I mean, the scenario is, do you remember this day? For example, this part here, these 2 days. This is also a inside day. There was a breakout of balance, and the breakout was, the market was just trading back and forth, back and forth. From this breakout, there was no acceptance below this. The market was having acceptance actually here in this area. Higher price was being accepted, and then boom, we have continuation of this movement. That's what Jim is talking about here. We have another inside there, another potential breakout balance here. And he also highlights something very important. This market is in a trend. It's a trending market. The direction of the trend is to the upside. All time frames are in sync. Monthly, weekly, and daily are trending higher. All of them are trending higher. What he says about that is, don't fight the trend. It's very important. The market can be very high and can keep going higher and higher and higher, and traders insist in shorting the market. By the time the market actually breaks, they will be so exhausted shorting the market that they won't be able to take the trade to the downside. Remain as neutral as you can and go with the market. Easy to say though. It's easy to say. It's really hard to do it because we have this tendency to see this market is just too high. I have to be short, right? It cannot keep going higher. And up we go. The structure below is really weak. Assuming of these observations that he was doing here, he's talking about this day, okay, FOMC day here, right? And while we have this low here that came back to this upper distribution, he pays a special attention to something here. What's that? Right? Notice how this day, which is FOMC, we have all this movement, and there were a couple of opportunities here, but the opportunities appear. We see that those opportunities during Chairman Powell press conference, and more specifically during the round questions. The question rounds. And there was something can be traced at when Chairman Powell spoke about how many cut rates next year will have, or may have, may have. And actually there was a PowerPoint that was that came up, that popped up on the screens during his press conference. When that happened is when we had L, M, and this sell from this area here, which was the 4,700 on December contract. And this action, L, did not close this distribution. Okay, it did not close, and that's what he calls this level very important. Okay, if the market, before that, Thursday, which is the next day, has a break that come back into this upper distribution. It did not come even closer to this. It just continued the trade to the upside. Now we have an inside, which is a form of balance. Okay, and anything to the upside or to the downside in this case, we'll need to see acceptance of lower prices below this level. And why this level in particular? Because taking this level, the next thing the market has is this distribution, which is not that wide or long, coming in here, potentially reach this other side of this distribution. And look at what we have here at center, right here, half back. Coming back in here, get too close to this one, repairing this one, get too close to, repairing this one, takes the market here, somewhere in here, really close to this level. And what do we have below? We have nothing, nothing. So having acceptance below this level, actually can risk this side. And guess what do we have here? One or another pull low here. Very weak. That's why he called this a very weak structure, very weak market, very weak rally. The fact that it's weak, it doesn't mean it cannot keep going higher. Okay, it doesn't mean that I'm going to be short. Okay, and you can see right now, live in the overnight, what traders are doing here. They are just selling again from this side, selling again. But look, look how the buying is coming here. Buying the dips as close as possible to the previous period low. Every buying here, every buy is getting weaker and weaker and weaker here. Now, this could be a 45-degree line for the overnight, right? Remember, the overnight trading is completely different than the regular trading hours. The same concepts or guidelines that we use or I use in the regular trading hours are not valid for the overnight. It has a good opening. If you were in the market when this market opened, it has a strong opening. The market opened kind of from here, and it rallied from that level. It was not the strongest, but it was a good opening. But, it's inside back. Alright, I don't have nothing else to add here. I guess I will call it. I will call the stream. And I hope I can see you tomorrow. I wish you guys a really good day or trading day tomorrow, and for the rest of the week if I cannot see you again. Alright, see you, bye bye.